Welcome back to Bazaar Morning Call. Well, let's discuss some stocks then with Prakash Diwan, a market expert who joins us. Hi, Prakash. Good morning. Good to see you in. Prakash, I wanted to ask you about Yes Bank. You know, some on the street believe that it would ultimately get the green signal, but Sumitomo is going to go ahead and, increase their stake. What's your view on the stock?
Good morning, Nigel. So I think essentially what it does is it kind of sets a floor to the price of the bank or the stock, and people would kind of start associating that as as a renewed journey of sorts from here on. The repair work will probably now finally see some action get materialized, and remember, you still have the overhang of some of the large chunks that need to be sold off from some of the strategic investors who bailed out the bank years back. So it's going to be a mixed bag. But what it does is it kind of takes a risk-reward zone to a slightly higher band. And my sense is this kind of becomes an entry point for a lot of people who would be patient enough to wait for things to repair. So quite good for people who have bought it at lower levels in this hope that this will materialize. But fresh buying will probably be a bit of a long-term bet and not something which will tactically do very well.
There is this other news flow that Vamakshi was earlier telling us that almost 15,000 hospitals will not, if you have a Bajaj FinServe or a Care Hospitals policy, then, they're halting. So basically the hospitals are halting cashless services for Bajaj Allianz customers. Have you gone through the news? What kind of an impact will it have on the share price today?
So, Rima, typically these kind of moves, end up getting a little bit of a, a reset in terms of market share or priorities that, people, the sellers basically recommend to clients. Every time you look at a health insurance plan, you will have people giving you various options. All of them sound very confusing. Now, what happens is when this huge chunk of hospitals is off the cashless list, it kind of becomes a little bit of a negative. So, you have other players which have started kind of getting more aggressive, much more active. So, and typically in health insurance, my experience is every couple of years, there's a rotation in terms of leadership. Bajaj has had it's held its way for quite some time. Probably going to give way to some of the newer names. I've been seeing Aditya Birla getting a bit very aggressive with health insurance as well, which they were not a few years back. So, depending on that, you'll probably see a bit of a shift in market share over a period of time. And a reaction could be sentimentally negative, but I don't think it makes any big difference in terms of what they're able to do in terms of growth. Incrementally, it becomes a bit difficult to sell, but that's not something, given the huge market size, addressable market that they have, I don't think it's going to make such a big difference.
Well, let's hop across to Prakash Diwan. Prakash, a couple of those names, Apollo Microsystems, DCX, they saw a correction. Both of them moved higher on very large volumes. You have a view on either of these two?
So, Nigel, I think, within the defense pack, if you see the top tier names like HL and BL, BDL, people have started kind of looking for value and opportunities in the second band. And these are companies which are doing exceedingly well in that space. We've spoken about DCX earlier, the way it kind of went up, corrected. Of course, cash flows is a bit of an issue. While the company remains profitable, owns a good balance sheet, it's about how quickly you see the conversion in terms of order inflow to realization. Defense is a little bit of a lumpy business, so you'll have to look at it slightly differently. But I don't know anything which has materially changed and that's been announced, but it looks like, there's demand coming in anticipation of some of the orders getting into realization mode. I mean, of course, Homers can make statistics look very interesting, but I don't have anything to back it up in terms of the fundamental change. But yes, a very positive on DCX, of course. And the same goes for Apollo Microsystem. Of course, it's run up a bit in terms of valuation. It's probably richly valued. So you'll probably have to wait for better entry levels in that one.
Gosh, the stocks that have really stood out has been, these delivery companies, whether you look at Eternal, Swiggy. We had Ramdev ji who joined us last week, and he's sounding very, very bullish on this theme. Do you think in the near term they've run ahead of themselves, or do you think for a longer term investor, actually, it's a great opportunity?
So yes to both. While they've run up, especially let's look at Eternal, because that's a model which is probably the closest that could get into a path to profitability very distinctly. Uh, the valuations are going to remain stretched for the simple reason you don't have much of alternatives equally weighted or equally promising. So that's the reason why nobody's willing to let go of the stock that they own. And that's precisely why the float is low and the multiples are higher. But my sense is you will get opportunities on certain, triggers that could come. We don't know which ones could lead to some sort of corrective phases. But anytime that you see those corrective phases, you buy it, because you buy it for the longer term. You buy it for a secular 4-5 year trend, Nigel. And that's what he's talking about being promising. It's difficult for others to replace that business model so quickly and without capex and without burn. So I would definitely look at buying into it, provided I get better valuation, better entry points. So that's a simple thesis. And my belief is you will get some opportunities down the way where you could kind of lock in at lower valuations as well.
Prakash, is value emerging in IT names? Today, Investec has come out with a note that Sudarshan was earlier talking about, where he's saying that, given the underperformance and the fact that in FY27 growth will pick up, some of these large cap IT companies or even mid cap IT companies are now giving the possibility of return, maybe a 15, 16, 20%. While a couple of months back, there was very little scope for any kind of return. Where do you stand on IT now?
No, absolutely. I think given where the valuations are, particularly for, let's say, the top three names, Infosys, TCS, HCL, I think Infosys is the one that I would focus on, given the fact that they've not had so much of organic disruption in terms of their business. The growth could come back much faster out there. And remember, one thing that we forget, while the TCS news of layoffs was very negatively received, it actually ends up getting to be beneficial for the company's P&L, right? And then the kind of benefits that AI is accruing to a lot of these names globally, companies which are in similar, if not identical businesses, there's no reason why AI will not help cut down on costs and delivery for even the larger ones. It's just a question of tweaking the contracts to suit their growth imperatives as well. And if that happens, probably that is something which could happen at the beginning of Jan or something, and that the first tremors of that will start getting captured by the market in November, December. So if you don't want to be too late, yes, you could lock in. But it's a great institutional pick. Infosys could give you another 18% of the next 12 months. If you're happy with that return, yes. But the broader market is still kind of, looking at steeper returns than this. And that's why IT is not featuring in much of discussions as yet. But yes, it does offer value in parts, provided you are willing to live with that kind of return back.
Prakash, how are you positioned on cement? I just want to tell our viewers as well that later today we're going to be having on Finding Alpha, we're going to focus full throttle on cement at around 2 p.m. today. So that's going to be a longer discussion. But Prakash, what I pick up in the near term is, since this GST cut is very, very probable, I understand that in the near term, cement companies are going to try their luck and try to push up prices. So when that cut comes, they don't have to pass on all the benefit. That's what I'm hearing. We'll have to see how much of that gets absorbed by the system, because it's monsoon as it is. But how are you positioned on cement, and what do you like?
So, difficult to surmise whether they'll get away with increasing the price, where the intention of the government to reduce GST is to finally bring down net prices. But yeah, I mean, there could be a balance between the two. And what's helping is, better capacity utilization, A. B, the input side is far more benign. And you know that how things have been so positive even in Q1, which we didn't anticipate. And given the scale that some of these names have built, Nigel, there's no reason why they will not be able to get, the benefit of operating leverage at some point in time. So all of that put together, you've got to be selective. Don't go with the M&A story anymore, because that's kind of played out. You will probably have the larger ones do better given efficiencies and the ability to benefit from market share improvement. Marginally things could look better for the top three names. And the smaller ones, the mid-sized names will probably catch up a bit later. But very positive on cement. I'm looking forward to your discussion, of course, in the day. But given where valuations are, I think cement definitely offers a very good chance of a re-rating for the. It's a cycle that's kind of positively poised at this point in time.
Thank you, Prakash, for joining in.